Hi, this is Jinay. I have been buying shares of Reliance Infra for 2 years now, and I have also been telling people to buy it too, with a target of 7, 8, 10 times the price. People weren't buying though. Now the prices are raising, so people have started asking me questions regarding the price hike. So this video is for them. This video won't cover basic concepts of how a stock is analyzed, but will cover all the important factors that can impact the company. Before I start this video, I want you to know that I hold 37,258 shares of Reliance Infra at an average of 21.7 and 1 share of Reliance Power at an average of 4.5. I purchased the share of Reliance Power so I can attend the AGM of Reliance Power, which is a subsidiary of Reliance Infra. You can see the photos that I hold 8,272 shares of Reliance Infra and 1 share of Reliance Power in my integrated account, and the remaining 28,986 shares in my HDFC account. I have been purchasing all these shares in SIP at 30,000 per month. Yes, I have not diversified because I have enough finance to take this chance, and also because I am very bullish on this stock. This video will explain you why. So let's start. So we start from the year 2018 because it is in this year that the real erosion of book value had started. Book value eroded from 21,984.66 crores to 14,290.88 crores in just 1 year, which is a downfall of 34.99% year on year. The major reason for this erosion was an exceptional loss of 12,797.36 crores, which was mainly because of writing off of its entire investment in Reliance Naval. The management at that time mentioned that some of this amount can be written back up upon successful debt resolution. But looking at today's situation of Reliance Naval, by today I mean 2021, I believe no amount will be written back up because Reliance Naval is struggling in its NCLT process. And we also don't have to worry about this amount now because it is anyway written off. Auditors concern. Auditors concern number one. 7,083 crores were given as EPC advance to a company in which Reliance Infra holds less than 2%. Now, this was claimed to be an ADAG supported company. The name of this company was not disclosed even to the auditors at that time. Investors started fearing as they felt this could be a scam, believing that the money given to this company could be written off and the entire amount will vanish. Second concern that the auditors had were regarding depreciation method used in Reliance Power. Auditors claimed that if an appropriate method had been used, then the loss of the company would have been much higher. Uncertainties regarding subsidiaries and associates. Auditors raised concerns over 11 of Reliance Infra subsidiaries and associates' ability to continue as going concern. The auditors also said a material uncertainty exists that may cast significant doubt on the Reliance Infra's ability to continue as a going concern. Let me tell you some of these subsidiaries. Mumbai Metro One Private Limited, Reliance Naval and Engineering Limited, Tiki Toll Road Private Limited, TD Toll Road Private Limited, Delhi Airport Metro Express Private Limited, also known as DMPL, which has a very interesting case stuck in Supreme Court, which I'll be continuing in the forward slides, BSES Kerala Power Limited, etc. Let me tell you that Reliance Infra has its 80 to 85% of revenue and EBITDA coming from its power distribution companies, BSES Rajdhani Power Limited and BSES Yamuna Power Limited. All the other verticals like tolls, EPC, defense, metro together contribute to only 10 to 15% of Reliance Infra's revenue and EBITDA. Most of these 11 companies are not from the distribution vertical. Now you get an idea of where the company stands. The beginning of financial year 2019, the IL&FS scam broke out. IL&FS is a NBFC. This NBFC shook the entire NBFC industry. There was a huge asset liability mismatch in the entire NBFC industry. Even auditors were started to be punished. It was at this time Reliance Infra auditor resigned, saying it cannot find sufficient information to establish a relationship between the EPC Advance Company and Reliance Infra. No new information was added. The company also started defaulting and continued defaulting. The share price were collapsing and the pledged shares were losing their value. As a result, the lenders were losing their collateral value and started selling promoter shares in open market in case of a default, which reduced the share price even further. If you are not understanding this, please Google how pledging shares work. That will help you. Book value eroded again this year from 14,290.88 crores to 10,447.01 crores. This time it was because Reliance Power shares, which were owned by Reliance Infra, were pledged and they got invoked. I am not talking about profitability because profitability is not a big issue here. The company is generating decent revenues and EBITDA and also good operating profit. Major chunk of income is constantly coming from other income, which involves income from regulatory assets, arbitration awards, its interest, income from subsidiary companies, and transactions similar to this kind. Also, I want you to know that the company has its amounts worth rupees 50,000 to 60,000 crores stuck in arbitration awards and regulatory assets. Mild losses at certain times have happened. That has happened because many of the subsidiaries were shut for a long time and were not working at full capacity. These are subsidiaries which involve metro, toll road and EPC. Losses also happened because of high interest payment and late payment surcharge, both of which will not be a problem once the company becomes debt free. Standalone versus consolidated. Entire presentation that is shown is based on standalone figures. If any of the subsidiary is not functioning properly, then the loss at most the parent company can have is writing off its equity investments in the subsidiary company. So there is not much to worry. Also, I want you to know that the company is performing almost equally good at consolidated levels also. So there is nothing to worry there also. But to keep the presentation brief and simple, let us take standalone only for now. I am not attaching any statements of profit and loss because these are self-explanatory points and I don't want to prolong the video. Check profit and loss statement of any past quarters and you will be able to relate with all these points. Other factors for price fall. The domino effect. Both Reliance Communication and Reliance Naval first started defaulting and then went bankrupt. Later, Reliance Power, Reliance Infra, and Reliance Capital joined them in defaulting. This created a domino effect where people started believing that Reliance Infra will also go bankrupt. Point number two, possibility of a scam. The name of 7,083 crore EPC Advance Company was later revealed. The name of the company is Crest Logistics. While the company has not declared Crest as a related party, Crest Logistics MCA filing will lead you to an office in Santa Cruz carrying Reliance Infrastructure signage. Two employees showed Reliance Infrastructure headquarters when asked where Crest Logistics is located. Auditors could not establish the relationship between them and could not establish whether the money could be recovered or not, enhancing the possibility of a scam. This further escalated the fear among investors and share price collapsed. Point number 3. Hurting investor confidence. In AGM, shareholders told Anil Ambani to make his sons directors of the company so people can rely on the company. Anil Ambani accepted it and made Anmol and Anshul Ambani directors of Reliance Infrastructure. Investors later felt cheated when both of Anil's sons quit Reliance Infra Board in less than 6 months. Why I started purchasing this share. Now before I start this slide, I request you all to be familiar with these basic terminologies like price to book value, price to earnings, debt to equity. If you're not familiar, then please Google it, understand it, and then continue watching this slide. So the first point, price to book value. Price to book value was very low. Now I cannot give you the exact figure as I have been continuously buying it throughout the time period. But the range of price to book value was from 3% to 8%, which is extremely cheap. It basically says I'm buying assets worth rupees 100 at a price of 3 to 8 rupees. Price to earnings was very low. At one point, the PE of the company was below 1 and then gone to negative because of operating loss TTM. I am afraid I cannot discuss the profit and loss statements here as the video will prolong if I do. But I will give you an example in the end of what I am trying to convey. Stable company. By stability, I mean the stability of revenue generation and operating profits. Very huge positive working capital. This again is a self-explanatory point as on March 31, 2020, the company's current assets were 13,344.35 crores against current liabilities of just 7,523.63 crores. Debt to equity. Debt to equity ratio is also very low. It is moving in the range of 0.33 to 0.5, which is very low even when compared to its industry average. Asset rich company. Once again, a self-explanatory point. If you just look at the balance sheet, you will know. As I've said earlier, that the company has rupees 50 to 60,000 crores stuck in arbitration and regulatory assets. Let me tell you two of these cases where the money is very evident to flow. Number one, based on arbitration awards already won worth 6,000 crores in cases of Delhi Metro Rail Corporation, in case of Goa Power, and in the case of National Highway Authority of India. Number two, the company has over 5,000 crores of cash inflows from the past regulatory assets related to Mumbai distribution business, which will flow over time. DMRC case. I have covered this case briefly in the next slide, as this case alone would furnish 5,000 to 6,000 crores to the company. Very high potential of becoming a turnaround. Now I am saying this because Reliance Infra has a debt of 5,246 crores against reserve and surplus of 10,183.98 crores, and also not to forget the arbitration awards and regulatory assets worth 50,000 to 60,000 crores. DMRC versus DAMEPL. Delhi Metro Rail Corporation, DMRC for short, is a state-owned company with equal participation from the Government of India and Government of National Capital Territory of Delhi. Delhi Airport Metro Express Private Limited, on the other hand, DAMEPL for short, is a special purpose vehicle, a subsidiary of Reliance Infrastructure. DMRC and DAMEPL had an agreement to build the metro together, where DMRC would set up civil structures and all remaining internal things would be done by DAMEPL. DMRC would make civil structures like tunnels, viaducts, station buildings, except depot buildings, and DAMEPL would do the design, supply, installation, testing, and commissioning of various railway systems like rolling stock, power supply, overhead equipments, signaling, track systems, platform, screen doors, ventilation, architectural finishing, etc. Now the structure was built by DMRC. DAMEPL then told that there is structural defect in the viaduct through which the train would run and asked DMRC to rectify it as it was DMRC's job to build it. DMRC said okay and started working on rectifying it. DMRC cannot rebuild the entire structure, so rectified it with whatever was possible by it. After rectification, it was realized that the speed of the trains should be reduced and frequency of trips should also be reduced because the structure cannot handle heavy load. DAMEPL then quit and claimed that the CMRS certificate was granted with the condition that the trains have to be run at reduced speed and frequency, which would make the operations commercially unviable for it. Now, the argument went to High Court in 2013. Interestingly, there was an agreement made in the contract. Under the agreement between the two, if the contract was terminated due to DAMEPL's fault, then DMRC would have to pay 80% of the debt. While if it was Metro's fault, then the PSU would have to pay 100% of the debt and 130% of the equity. The case got finished by 2017. A bench of 3 judges unanimously gave judgment in the favor of DAMEPL. This case was then taken to Supreme Court and is still ongoing. The case is in its ending stages. You can also track this case on Supreme Court app or website. The case number is 4115. Case type Special Leave Petition Civil, year 2019. The amount with interest should be approx 5,000 to 6,000 crores. Even let's say we lose the case, which I don't believe will happen, we still get approx 4,000 to 5,000 crores subject to the interest rate applied. Personal bias and presumptions. I did not feel there was any scam in the figures of balance sheet and profit and loss statement because when I saw balance sheet and profit and loss statements of other companies like Arcom, Naval, they were consistently making losses and book value was consistently eroding. They were bound to be bankrupt. I did not spend much time analyzing the other companies, so I cannot talk much about them. The only place where I felt scam could happen was with Crest Logistics, the 7,083 crores EPC advance case. The second thing that I felt was price was deliberately kept down. This could be because of the Chinese bank case, where Chinese bank claims Anil Ambani has given personal guarantee to avail loans for Arcom. With lenders invoking all of promoters' shares, there is nothing left with Anil Ambani on his name in the company. Promoters now only hold 4.98% of the company, 94.13% of which is also pledged. I believe the price will go up when the Arcom issue will solve and there would be some clarity on Chinese bank case. Third point is tricky. I have been following this company for a long time now. The thing with this company is whenever there is a good news, it is always accompanied with a bad news, which is revealed then. For instance, let's say the company gets a good news in May. Then at the same particular day, the news of default also comes. And when you read the entire article, it says Reliance Infra has defaulted on a loan of 0.70 crores, meaning 70 lakhs, to some XYZ bank. If I remember correctly, then it was Jammu and Kashmir Bank on some date of April. Now this has actually happened many times with this company. Ambanis are popular for operating in their own companies, Anil Ambani especially. Now two things are weird here. First, why is April default news being revealed in May? Second thing, the company defaulted for only 70 lakhs. Okay, let's take this for fact now. And see, few days later, I see Reliance Infra building a facility very quickly to distribute power to Corona Quarantine Center with 10,000 beds, which was newly made at that time in Delhi. It couldn't pay 70 lakhs to the bank but could spend money for business. How this impacts the stock is people do not read much. They don't see 70 lakhs or the date of default. They only see the word default and start judging. Anil Ambani is smart in creating the image of what he wants to create, and right now showing bankruptcy would help him in Chinese bank case, so he's leaving no stone unturned for that. Now what if there is a scam? Only one scam is visible, that is the EPC advance scam. If there is a scam, we can set off the amount with the DMRC case. Setting off would still create approx 1000 crores in deficit. Not to forget the 5000 crores of regulatory income from Mumbai distribution business and arbitration awards from Goa Power and NHAI. No assets are need to be sold to cover that, but the company will struggle immensely in short run and debt reduction if the scam happens. Point number 2. The stock price was already heavily discounted. For instance, my average is 21.7 and at this price, my price to book value is 0.05, which means I am purchasing this at a 95% discount. Also, the market value at 21.7 comes to be 570.71 crores. It is like saying I have purchased entire Reliance Infra at just 570.71 crores. Third point, it is not the first time that the company is doing business with Crest Logistics. The management confirmed that before also 1000-2000 crores were given as EPC advance and business has happened successfully. But this time the amount is huge. That is why people are panicking. Also now this slide is still in continuation of why I purchased this share, which is this slide. This is talking of past when I purchased the shares. Current scenario is however different. The current scenario will relieve you. I'll talk about current scenario in the coming slides. Other random things affecting this stock. Bandra Versova ceiling project. Now this is a 7000 crore project which is won by Reliance Infrastructure. Bandra Versova ceiling project is 17.17 km long bridge which is 3 times larger than Bandra Worli ceiling. Joint venture with Thales and Dassault. Joint venture with Thales is to develop Indian capabilities to integrate and maintain the radar and electronic warfare sensors for fighter aircrafts. Joint venture with Dassault is doing multiple things like manufacturing important components for Falcon 2000 jets with possibility of the final assembly of the entire aircraft in Mihan, and the same can be expected with Rafale also. See, defense is an industry with long gestation period. Nothing will happen in 1-2 years. The growth will happen over years. Both these ventures can still be said to be at a nascent stage with huge growth potential. Under Make in India initiative, the company also started setting up a plan for manufacturing light machine guns. The prototype of the LMG is still not submitted to the army, and there are 3 contenders, one of which is Adani Group's PLR systems. Sale of DA toll road. Since this has been sold, let's not go deep in this. Just remember the value 3600 crores. Parbati Koldam transmission was also sold for 900 crores. Sale of Reliance Center. Reliance Center was the new headquarters of Reliance Infra which got sold for 1200 crores. Reliance Infra has its old headquarters in DAKC and all the operations got shifted there. The deal of 1200 crores would actually improve our return on assets and return on equity as this was not a revenue generating asset and all its operations are still continuing. Now let's talk about the current scenario. Vision. Reliance Infrastructure to transform itself into an asset light, high growth, high dividend and high ROE company. The possibility of this is visible because we have seen Reliance Infra repaying massive amounts of debt in past, and even in this year, huge amounts of debt have been repaid. In the last AGM, management said that the promoters of Reliance Power and Reliance Infra will increase their stakes in the company. Reliance Power to be subsidiary again if promoters increase stakes. And when this happens, book value will appreciate in thousands of crores while the stake purchase would be in hundreds of crores only, because there is a huge gap between book value and market cap of Reliance Power. 5,700 crores have been repaid in the year 2020 to 21. This 5,700 crores have been raised by sale of DA Toll Road, Parbati Koldam and Reliance Center. Once again, look at the balance sheet now. It has a loan of 5,246.19 crores and it has already repaid 5,700 crores. Now obviously it would not have paid entire amount to non-current lenders. Some would have been paid to current lenders too. But still, huge amount of loan have been reduced. Also 3600 crores of 5700 crores was paid on 1st January 2021, meaning interest expense in quarter 4 would also be less. Also the Crest Logistics transaction which happened in 2018-19, it is not written off so far and I don't think it would be written off now because the company has already become almost debt free. What is the point of siphoning money now when the company is not going bankrupt only? I believe EPC advance could have been a move to collapse Reliance Infra so that people don't buy Anil's shares when they get invoked. But still, if you feel the siphoning might happen, then keep your eyes open and keep monitoring this company if you buy this share. As I have said, DMRC is in its ending stages and was last heard on April 6, 2021. And also, don't forget that the company also has amounts worth 50 to 60,000 crores stuck in arbitration awards and regulatory assets. I am expecting good quarterly results and a really good balance sheet for the year 2021. Now let's talk about the factors that can cause the boom. Company becoming debt free. If the company becomes debt free, the price will increase multiple times because the prices right now are extremely undervalued. DMRC case. If the case is won, the company becomes debt free and cash surplus. If the case is lost, still the company becomes debt free and cash surplus. Once again, the loan amount is not 5,200 crores anymore because 5,700 crores have been repaid. So our updated loan would be very less, which we will know when the balance sheet of 2021 is disclosed. Promoters increasing their shareholding will cause the boom and increasing stakes in R Power will also cause the boom. So now let's talk about the target. How much should the target be? According to me, triple digits at least. It can very easily touch 200 to 300 if things go right in around 2 years or less. It also has the potential to easily reach 600 to 800 to 1000 and more in long run if things go right. All these targets depend on how the events unfold. Constant monitoring is very important and I am extremely bullish on this because these events are very likely to happen in the favor of the company. Okay, so this slide is for people who are confused, who might be thinking 200 to 300 is okay, but how am I saying a target of 1000 and more in long run? Now see, the net profit is 1031.27 crores. I'm taking this figure, I'm not taking this figure. So 1031.27 crores divided by 26.3. 26.3 crores are the number of outstanding shares. So when divided by 26.3, we get an EPS of 39.21. So even if you take a PE of 10, the stock price becomes 392.1. Well, this has not happened yet because of troubles in the company. But once it becomes trouble free, it will boom. This, I suppose, explains the target of 200 to 300. Now let's say the company becomes debt free. Then the finance cost of 918 crores, this cost basically means interest paid on loan. 918 crores will be reduced, then profit will increase by 918 crores. So when added, 918 crores plus 1031.27 crores gives us 1949.27 crores. When divided by 26.3, we get an EPS of 74.11. So the same company, the same operating profit, when the company becomes debt free, the EPS increases by a lot. So at 74.11, even if we take a PE of 10, the share price becomes 741.15. Now this is just an example of what might happen. See, DA Toll Road and Parbati were not heavy contributors to revenue, so revenue won't be affected as much as interest expense being affected. Reliance headquarters was not making any revenue at all. Also, let's talk about growth. Growth works as compounding. If the company becomes debt free and grows at 15%, then the book value doubles in 5 years. Now let's say along with growth, book value has already raised because Reliance Infra has acquired shares in Reliance Power again at cheap valuations. We all know a growth company which is debt free is always traded at premium to book value. This will boom the stock price to 800 to 900 in a span of 1 or 2 years. And a growth of 15% would double the book value in another 5 years. And not to forget the arbitration awards and regulatory income that would flow in worth 50 to 60,000 crores. Either the company would utilize it and the book value would increase, or the company would give it back to shareholders and dividends because of excess cash. See, once again, it depends on the outcome of events and how events are occurring. Constant monitoring is very important.